You see a lot of talks happening in the financial media about the potential rate cuts from Bank of Canada this year and the next year as well. A lot of economists are predicting, 3, 4, 6 rate cuts is going to happen in the next 12 to 18 months. And one of the major consensus that we are seeing among the economists is if this happens, especially before the Federal Reserve, then this will put a lot of downward pressure on the Canadian dollar against USD. And the reason is because if you see the Canadian monetary policy is running towards a lower interest rate, which will push the Canadian bond yields downward, especially the short end of the curve, this will make the US treasuries more attractive because the yields on the US treasury bonds is going to be higher compared to Canadian bonds, which will actually attract a lot of foreign capital into the US market away from the Canadian bond market as well. So that's the major reason we and other economists assume that this could happen, when and if Bank of Canada starts cutting rate before the Federal Reserve. So I was reading this article on Financial Post by Martin Pelletier, one of the major hedge fund owner, and he kind of alluded the reasons why he thinks this is going to happen, and because of that, he's trying to protect his clients' capital against this potential downward movement in the Canadian dollar. And he kind of laid out the comparison between the US economy and Canadian economy. I mean, both countries and both governments have been running massive fiscal deficits, right? But the difference between US and Canada is US has global reserve currency, and they also have much stronger economy. Okay, and their economy has been growing consistently, right? Even if you compare the GDP per capita, US GDP per capita is growing 8%, versus Canadian GDP per capita has shrunk by 2%. So there is a massive difference in terms of the GDP per capita growth between the two countries. So when you have a lower productivity, when you have lower growth, that means you don't have enough wealth to tax in order to collect the revenue, in order to pay off all the extra spending. So traditionally, governments, what they do, they actually sell more bonds to take more borrowing, right? And for the last 3 or 2 years, central banks have been buying these government bonds. Like Bank of Canada was buying a lot of Canadian bonds in order to finance the fiscal deficit. Similarly, in the US, Federal Reserve was financing the US government fiscal deficit, and because of that, this was an easy way to kind of spend money. Now this is coming to a point where I think this is not fiscally possible to continue finance the debt. So the Canadian government is moving towards taxing the Canadians more in order to cover all the spending as well. But I think the problem here in Canada is the economy is not stronger, and we don't have enough wealth being generated because of obvious reasons, right? So taxing more Canadians is basically creating more difficulty for the Canadians, which are already struggling with higher inflation and lower productivity and less amount of jobs available in the private sector. Because of these risks, Martin Pelletier believes that if Bank of Canada is going to cut rates, it's going to be a major disaster for Canadian dollar, which will further decline against USD. And because of that, I think all of these hedge fund owners are trying to protect against this downward movement. And what they're trying to do is they're trying to move away from keeping their assets in Canadian dollar towards US dollar, right? And this makes me think that maybe at an individual level, we all should also protect our capital, our purchasing power, and keep this in US dollar, because who knows what's going to happen tomorrow. The hard-working Canadians will actually lose their purchasing power if this happens. If Canadian dollar goes down against USD, let's say from 72 cents to 50 cents, we will lose a ton of purchasing power, right? Which means more inflation for us. The fuel prices will go up, the food prices will go up, the rents will go up, the property prices will go up. So as Canadian dollar gets depreciated further, it's going to erode our purchasing power. And I think all of us who are investing their capital into these assets should consider this move. I mean, I know that this is going to be very un-Canadian to move away from Canadian dollar, but guys, we all are protecting our financial freedom here, right? And if we want to do that, we have to make sure that our families financial future is protected. And I'm sharing these things just to let you know that this is happening in real time by these hedge fund owners who are Canadian, who love Canada, but they also want to protect their own purchasing power as well. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Anyway, you let me know what you think about that. How are you protecting your financial freedom and your financial future for your kids? Put your comments down below. Let me know what you think about that, and I'll see you in my next video. Bye. Sorry for the interruption, guys. Just wanted to let you know that we have a team of realtors which is covering the entire GTA as well as some outside areas as well, like Brent region where I am based off, and I help out the clients in this region as well. So if you have any needs with regards to real estate transactions, buying, selling, investing, renting, let me know. There's a link down there where you can book a one-to-one consulting call with me, and we will be more than happy to help you out.